Welcome back to The Deep Dive, the show where we cut through the noise to get you truly well informed. Today, we're focusing on something that touches every one of our lives every single day, yet often remains out of sight, out of mind, our water infrastructure. Think about it, that silent, complex network of pipes, pumps, and purification systems that brings clean water to your tap, ensures our cities function, and powers industries. It's absolutely vital and largely taken for granted. But what if there was a company not just involved in this essential infrastructure, but actively innovating to modernize it for a future where water is increasingly precious? That's why today we're taking a deep dive into Badger Meter Inc., or BMI. This isn't just a utility supplier. It's a company positioned right at the cutting edge of an invisible but absolutely massive global transformation in how we manage our most precious resource. It's kind of a quiet revolution happening beneath our streets and within our homes.
Precisely. And we've got a comprehensive investment analysis in front of us, quite detailed, actually. Our mission, as always, is to extract the most critical, often surprising insights for you. We'll be looking at everything from Badger Meter's core business model and their unique market position to their financial health, strategic direction, and of course the inherent risks and its current market valuation. We want to give you the full nuanced picture of how they fit into this essential and, evolving landscape.
And by the end of this deep dive, you'll have a much clearer understanding of the immense, often unseen forces shaping our global water systems, and how a highly focused, pure-play company like Badger Meter is positioning itself for what looks like a multi-decade transformation. Get ready to understand not just what Badger Meter does, but why it matters so profoundly to our future. Okay, let's pull back the curtain on this company then. What exactly is Badger Meter, and maybe more importantly, why should it command our attention in a world often focused on, flashier tech? Our sources describe them as a leading innovator and manufacturer of flow measurement and control solutions. Now, that sounds maybe a bit dry, but when you consider what's at stake, efficient water delivery, conservation, accurate billing, it's actually incredibly important stuff.
It truly is, and their strategic position is quite unique in the industrial landscape. Badger Meter is what we call a pure play in the water technology sector. So unlike some of the larger, more diversified industrial giants you might think of, whose portfolios span everything from electricity grids to gas distribution, Badger Meter's entire strategic focus is on water. This singular dedication isn't just a niche. It allows them to be incredibly agile and deeply specialized. They're strategically positioned to capitalize on these powerful multi-decade secular tailwinds that are driving the modernization of global water infrastructure. It's a massive, unavoidable trend that they're directly benefiting from, really without the distraction of other markets. The investment case for Badger Meter, as laid out in our analysis, it really rests on three core pillars that collectively paint a very compelling picture. First, a defensible niche market position. They've not only specialized, but they've truly excelled within it, building significant barriers to entry for competitors. That's key. Second, superior and expanding profitability, which isn't just a good sign for a business, right? It indicates a company with strong pricing power and operational efficiency. And third, a pristine, debt-free balance sheet. This gives them incredible financial flexibility and resilience in pretty much any economic climate. These aren't just isolated facts. They collectively reveal a company building an almost unassailable position in a segment of infrastructure that, frankly, for too long has been overlooked. It's a testament to focused execution in a fragmented yet vital market.
Right. So we're talking about a company that's benefiting from a fundamental, non-discretionary, long-term upgrade cycle. You can imagine municipalities around the world, but especially here in North America, facing this unavoidable need to replace their aging mechanical water meters. The ones that have been clicking away for decades, with advanced solid-state smart metering technology. This isn't just about convenience. It feels like an imperative. We see cities every day grappling with burst pipes and water loss. This is a huge, unavoidable undertaking. And BMI is right there to facilitate it, essentially turning a critical problem into a core business opportunity.
And this leads us to what is perhaps the most critical long-term value driver for the company. And honestly, one of the most fascinating shifts in their business model that we need to really unpack. Badger Meter is fundamentally transforming itself from being primarily a hardware-centric business, essentially, a manufacturer of physical meters, to an integrated solutions provider. What this means is that the initial sale of their advanced metering infrastructure, or AMI, endpoints basically, the smart meters themselves, isn't the end of the transaction, not at all. Instead, it effectively seeds a growing, high-margin, recurring revenue stream from their Beacon software as a service, or SaaS, platform. It's a classic razor and blade dynamic, sure, but what's truly transformative here is that it fundamentally changes their valuation profile. They're not just selling product once, they're building this continuous high-margin relationship with their customers. And that pushes them closer to a technology or software company evaluation rather than just a traditional manufacturer.
Okay, now, I have to briefly interject a note of caution right up front, just to set expectations and ensure we have a balanced view here. Our analysis points out that the company's exceptional performance and strong outlook are, well, already very well understood and rewarded by the market. This has led to a premium valuation that demands near flawless execution and sustained high growth to be justified. So, while the story is compelling, the market has clearly already factored in a lot of that optimism. The challenge for us then is to really understand why the market places such a high value on them and whether that valuation is truly warranted given their long-term potential. Okay, let's delve a bit deeper into the company itself, understand its journey a bit. Badger Meter was founded way back in 1905, headquartered in Milwaukee, Wisconsin. They've really evolved over more than a century, transforming from a traditional manufacturer of brass meters into a truly global provider of advanced water technology solutions. It's a testament to remarkable adaptability, really, moving from the purely mechanical to the digital and staying power in an essential but often slow to change industry.
Absolutely. And organizationally, the company operates and reports as a single integrated business segment. Management believes this structure genuinely reflects the deep operational synergies across their various product lines, their production processes, and their diverse customer bases. It suggests a holistic approach to water management rather than, siloed product categories. While this integrated approach certainly fosters efficiency and strategic alignment, it also means that, from a financial disclosure perspective, we get less granular detail than if they broke things down into multiple distinct segments. This implies management sees the entire wider ecosystem as one interconnected challenge requiring unified solutions, basically.
Okay, so let's talk about those core business operations then. They effectively fall into two main product lines. First, and by far the largest, is their utility water product line. This accounted for approximately 85% of their total net sales in 2023. This is where they primarily serve municipal water utilities, largely here in North America, addressing that foundational need for water measurement and management at a citywide scale. Within this utility water segment, they offer a pretty comprehensive suite of solutions. First, there are the water meters themselves. This includes both traditional mechanical meters, which most of us are familiar with, but more strategically, their advanced E-Series ultrasonic solid-state meters. These are pretty cool. They have no moving parts, which is a real game changer. Think about it. No gears to wear out, no friction. This means higher accuracy over their entire lifespan, less maintenance, and significantly less wear and tear than traditional mechanical meters. That's crucial for utilities trying to reduce what they call non-revenue water, as accurate, sustained measurement over time is absolutely key. Then there are the radio endpoints, specifically their Orion family. These are the critical components that enable remote meter reading. They offer solutions for both one-way automated meter reading or AMR systems, which kind of collect data on a route, and the more advanced two-way advanced metering infrastructure, AMI, networks. Our sources highlight Badger Meter's strong focus on cellular AMI technology. That seems important. It's a major differentiator because it leverages existing ubiquitous telecommunications infrastructure. Exactly. This frees utilities from the significant capital expenditure and ongoing maintenance of building and operating their own proprietary radio frequency networks. It offers a lower total cost of ownership and much faster deployment. It's kind of like choosing to use the internet everyone already has instead of building your own private network, right?
That's a perfect analogy.
Okay, and beyond the hardware, they also provide software and analytics through their Beacon Software as a Service, or SaaS, platform. This is a cloud-hosted suite that gives utilities powerful data analytics, remote monitoring capabilities, and tools for engaging directly with their consumers. It's about turning raw data into actionable intelligence, helping utilities respond proactively to issues instead of just reacting. And finally, they offer truly integrated solutions. They've recently branded these comprehensive offerings under their Blue Edge suite, which basically packages smart measurement hardware, reliable communications, cutting-edge software, and ongoing support into a tailor-made, holistic solution for their customers. It's a bundled offering that streamlines the entire water management process for a utility.
Right. And what truly sets this apart is how this transition to integrated solutions, and particularly the emphasis on cellular AMI, genuinely changes the game for utilities. Traditionally, building out an AMI system meant a utility had to invest significant capital into constructing and maintaining its own proprietary radio frequency, or RF, network. That's a massive undertaking with ongoing costs and technical complexities. Cellular AMI liberates them from that burden. By leveraging existing telecom infrastructure, utilities avoid that huge upfront capital expenditure and reduce long-term maintenance. This often translates to a substantially lower total cost of ownership, much faster deployment times, and greater flexibility for the utility, which makes it a very compelling value proposition in a, let's face it, cost-conscious sector.
Now, the smaller, more specialized segment is the flow instrumentation product line. This made up about 15% of their 2023 net sales. This line provides a range of meters, valves, and other sensing instruments to measure and control fluids in various industrial settings. Think industrial process control, water and wastewater treatment plants beyond the municipal connection, HVC systems, and general corporate sustainability applications where precise fluid measurement is absolutely critical. It's a different customer base, definitely, but the core expertise in flow measurement remains consistent. Let's turn our attention to their revenue streams, and that strategic shift we touched on earlier is pretty crucial for understanding the future trajectory of this company. Our analysis notes a significant geographic concentration. In fiscal year 2023, the United States alone accounted for a dominant 88% of Badger Meter's $703.6 million in total revenue. Foreign sales, primarily to Europe, Asia, and Canada, made up the remaining 12%. So while this deep penetration of the U.S. market certainly provides a stable and mature foundation, it also represents a notable geographic concentration risk. What are your thoughts on that balance?
That's a valid point, absolutely. While deep market penetration provides immediate strength, it also means a heavy reliance on a single economic and regulatory environment. However, this brings us directly back to that crucial revenue mix shift we discussed earlier, which is an early stage but strategically vital transition, especially given that geographic concentration. In 2023, one-time revenue, primarily from hardware sales of meters and radios, was $659.3 million. That represents a substantial 93.7% of total net sales, still the lion's share, clearly. In contrast, recurring revenue, almost entirely from Beacon SaaS subscriptions, was $44.3 million, or just 6.3% of total net sales in 2023. Now, while that percentage seems small today, if we connect this to the bigger picture, it's clear that the rapid growth in AMI hardware sales today is effectively seeding a future stream of predictable, high-margin recurring revenue. This is a critical point because it fundamentally changes the nature of the business. As they deploy more meters, they are building a sticky, subscription-based customer relationship that is less cyclical and more predictable than hardware sales. This suggests that current profitability metrics may actually understate the company's future margin potential as this software business scales. As more AMI endpoints are installed, that recurring SaaS revenue base will grow, inherently boosting overall profitability margins and, crucially, warranting a different kind of valuation from the market eventually.
And who are these customers that are driving this transition? The company's primary end market is municipal water utilities. These are typically quasi-governmental entities, right? Which is an important distinction from, say, a private industrial customer.
Yes, exactly. Because this customer base provides a significant degree of resilience to the business, and it's a crucial aspect of their stability. Their capital spending is largely driven by long-term, non-discretionary needs. We're talking essential requirements. Things like replacing aging infrastructure to ensure public health and safety, complying with ever-evolving regulatory mandates on water quality and environmental protection, and, crucially, reducing non-revenue water. That's water that's treated and distributed but then lost before it's billed, usually through leaks. A huge issue. These aren't discretionary projects that can be easily cut from a budget. This makes the business generally far less cyclical than general industrial spending. Though it's important to note that demand isn't entirely immune to municipal budget constraints or broader economic cycles, but still, water is a necessity, not a luxury, and its management is non-negotiable.
Okay, here's where the scale of this opportunity truly becomes apparent. The global water and wastewater treatment market is absolutely vast. Our sources estimate that this market will grow from $323.3 billion in 2023 to over $617.8 billion by 2032. That's a compound annual growth rate, or CAGR, of approximately 7.5%. That's a huge, steadily expanding pie, indicating a foundational and growing need across the globe.
And within that immense global market, North America is a dominant player. It represented the largest regional market with a 38.7% share in 2023. The U.S. market alone is forecast to grow at a 6.9% CAGR, reaching $206.6 billion by 2032. For a company like Badger Meter that's so heavily focused on this region, this provides a substantial and long-lasting tailwind for their investment and growth. This isn't just growth. It's a foundational demand driven by aging systems, increasing population, and environmental pressures. It ensures a prolonged runway for companies in this sector.
Now, if we zoom in even further, on BMI-specific niche, the smart water metering segment, we see even faster, almost exponential growth. One analysis projects this global market to expand from $3.2 billion in 2024 to a staggering $33.5 billion by 2034. That's an incredible SANGR of 26.2%. That's not just growth, that's an accelerating transformation. Wow.
Yeah, it's pretty dramatic. It's worth acknowledging that various forecasts can show some variation, of course. Some estimates for the broader smart water metering market range from maybe 7.5% to 11.9% through 2030, depending on the exact scope they use. However, the consistent theme across all these projections is robust double-digit growth for the specific technologies Badger Meters specializes in. This isn't just about replacing old pipes. It's a fundamental reimagining of a utility sector, transforming from analog to digital at a pace we haven't seen in decades. That's the real opportunity here, that transformation. And crucially, the North American AMI water meter market, which is Badger Meter's absolute core focus, is projected to grow at a very strong KGR of 28.7% from 2025 to 2034. This isn't just validating their strategic focus, it's highlighting that their primary market is experiencing an immense and accelerating wave of adoption for the exact solutions they provide.
So why does this exponential growth in smart metering matter to your understanding of BMI? Because it shows a massive accelerating shift in how water is managed globally. This isn't just about replacing old equipment, it's about a fundamental digital transformation of a critical resource, driven by compelling economic and environmental realities. So what specific forces are driving this fundamental, undeniable shift towards smart meters and advanced water management? What are these unavoidable trends pushing this forward? Well, first, there's the sheer scale of aging infrastructure. In developed nations like the U.S., our sources tell us an estimated 6 billion gallons of treated water are lost daily due to frequent water main breaks. That's enough to fill about 9,000 Olympic-sized swimming pools just wasted. Daily. This isn't just an inefficiency, it's a public health risk, a massive financial drain, and a huge environmental cost. The U.S. Environmental Protection Agency, the EPA, estimates that upgrading and maintaining the nation's water infrastructure will require approximately $271 billion over the next 20 years. I remember a few years ago, my own city had a major water main break that caused huge disruption, forcing a boil water advisory for days. It was a mess. Is Badger Meter's technology primarily designed to predict or prevent those kinds of catastrophic failures, or mostly to just quickly detect the aftermath and reduce the overall non-revenue water?
That's an excellent question, and it really highlights the multiple layers of value smart meters provide. While a meter itself won't prevent a pipe from bursting, no. The data it generates, especially when integrated into an AMI system like Beacon, is absolutely critical for both proactive and reactive measures. On the proactive side, real-time data on pressure fluctuations and flow anomalies can help utilities identify areas of stress in the network before a catastrophic break occurs. It allows for predictive maintenance, targeting vulnerable sections for upgrade. On the reactive side, when a leak does occur, smart meters, combined with the right analytics software, can pinpoint the location and magnitude of the loss almost instantly. This drastically reduces detection time compared to traditional methods, which could take days or weeks.
Wow.
This minimizes water loss, reduces the environmental impact, and significantly lowers the economic cost of repairs and lost revenue. So it's truly a tool for comprehensive network health, moving from reactive fixes to proactive management. This non-discretionary need for replacement and modernization creates a compelling long-term demand for BMI's core products.
Okay. Second, we have water conservation and scarcity. Rapid urbanization and population growth are placing unprecedented stress on finite water resources worldwide. We see it in persistent droughts in the American West, in burgeoning megacities struggling to meet demand. It's everywhere. Smart meters are a critical enabling technology for conservation efforts. They provide the granular, real-time data needed to detect leaks quickly and, crucially, empower consumers to manage their usage more effectively. That's driving their adoption by utilities facing these immense pressures. It's about making an invisible resource visible, really. Third, there are regulatory mandates and government funding. Government action is proving to be a significant accelerator, transforming good ideas into widespread adoption. For example, the U.S. bipartisan infrastructure law specifically allocated over $50 billion for water infrastructure. This isn't just a political talking point, it's direct funding and financing available to municipalities. It effectively subsidizes these necessary upgrades and provides a massive incentive incentive to modernize their systems now rather than waiting. And fourth, we're seeing a full-blown digital transformation from one-way automated meter reading, AMR, to two-way advanced metering infrastructure, AMI. This isn't just an incremental improvement, it's a paradigm shift. AMI systems are the fastest growing technology segment in this space because they provide real-time two-way communication. This capability is essential for advanced data analytics, helping utilities improve operational efficiency, significantly reduce labor costs associated with manual meter reading, and effectively combat that costly non-revenue water problem. Imagine being able to shut off a meter remotely or instantly detect tampering. That's the power of two-way communication.
Right. And this raises an important question. What does all this truly mean for the future of water management? The historical paradigm of water as an abundant and inexpensive commodity is clearly coming to an end. We all see that. As the economic and environmental costs of sourcing, treating, and distributing water continue to rise, the financial incentive for utilities to minimize waste and accurately bill for every unit consumed increases exponentially. Smart metering solutions, particularly the highly accurate ultrasonic models with AMI connectivity that are Badger Meter's specialty, are the primary, most effective tools for achieving these critical goals. This makes their adoption an economic necessity for utilities, creating a powerful and durable demand cycle that is largely insulated from typical economic fluctuations. It's not a luxury. It's becoming a must-have for modern, responsible water stewardship.
Okay, but Badger Meter isn't alone in this rapidly growing market. That much is clear. So, who are their main rivals? Who are the giants in the room they're competing against, and how do they stack up?
That's a crucial question because while Badger Meter is a leader in its specific niche, its primary competitors are generally significantly larger, more diversified industrial technology companies with truly global scale. We're talking about some serious players with broad portfolios. First, you have Itron, ITRI. They're a global leader in technology and services for the energy and water industries. A formidable competitor with a vast installed base and a broad portfolio that spans electricity, gas, and water meters, along with communication networks and software. They really offer end-to-end solutions across multiple utility types.
Big footprint.
Definitely. Then there's Xylem, XYL, particularly their Sensus brand. Xylem is a major global water technology company focused purely on water, but with a much broader scope than BMI, encompassing pumps, treatment, analytics, the works. Their Sensus brand is a direct competitor in metering, offering smart meters, their own proprietary FlexNet communication network, and advanced data analytics software across water, gas, and electric utility markets. Next, we have Landis plus Jura, LandSW. They're a leading global provider of integrated energy management solutions, primarily focused on electricity metering. However, they also offer gas and water metering products and are leveraging their Gridstream Connect IoT platform to provide multi-commodity AMI solutions. And they have a stated strategic focus on expanding in the Americas market. So they are definitely moving into BMI's territory.
Right, encroaching a bit.
Yeah. Also in the mix is Mueller Water Products, MWA. They're a prominent North American manufacturer of products for water transmission, distribution, and measurement. Their offerings include Mueller-branded meters with AMRAMI capabilities, Ecologics, acoustic leak detection technology, and Singer valve pressure management solutions, all contributing to their smart water technology range. They're also deeply entrenched in the underlying pipe infrastructure itself. And finally, there's Neptune Technology Group, a long-standing and focused competitor, particularly in the North American water utility market. They offer a full line of water meters and AMRAMI system technologies. So it's a crowded, competitive field, no doubt, dominated by players with significant resources.
So it's clear these competitors are significantly larger, more diversified industrial technology companies with global scale.
Yeah.
That certainly makes BMI's sustained leadership in its niche all the more impressive. But given this intense competition, how do they not just survive, but truly thrive? What are their unique strengths, their competitive advantages, or, as we like to call it, their moat? What protects them?
Their strengths are quite clear and are largely a direct result of that strategic focus we talked about. One of their biggest advantages is their pure play focus. Unlike most of its main competitors, which are diversified across multiple utility types, electricity, gas, water Badger Meter is exclusively dedicated to the water industry. This singular focus allows for much deeper domain expertise, more targeted R&D investment, and stronger, more specialized relationships with water utility customers. They know water inside and out, making them the go-to experts for solutions tailored specifically to water challenges. Second, they have demonstrated technology leadership. BMI has built a strong reputation for innovation, and they are recognized leaders in two critical high-growth technologies. First, their ultrasonic meters.
These are solid-state meters with no moving parts. This means they maintain their measurement accuracy over their entire lifespan, think 20 years or more, and are significantly less prone to wear and tear than traditional mechanical meters. This is a crucial advantage for utilities looking to reduce non-revenue water, as consistent, accurate measurement over time is key to their bottom line. And second, their cellular AMI. Badger Meter has been a pioneer in leveraging existing ubiquitous cellular networks for its advanced metering infrastructure solutions. This is a huge differentiator because it liberates utilities from the significant capital expense and ongoing maintenance burden of building and operating their own proprietary radio frequency RF network infrastructure.
Right, we covered that. Big advantage.
Huge. Yeah. It offers a lower total cost of ownership and much faster deployment, often by months or even years, making it a very attractive option, especially for smaller to medium-sized utilities for apps. Lastly, they benefit immensely from a strong brand reputation and switching costs. Having operated for over a century, Badger Meter has a trusted brand name and a very large installed base of meters. For a utility, deciding to switch meter providers is complex and incredibly expensive. It involves the physical replacement of potentially thousands or hundreds of thousands of assets across an entire service territory, retraining staff on new systems, integrating new software.
Yeah, it's a massive headache.
These are not simple plug-and-play changes. This creates significant customer stickiness and high switching costs, effectively locking in customers for long cycles.
So what does all this mean for their position in the market? These aren't just abstract ideas. These are concrete barriers to entry for competitors and very real reasons why customers choose to stick with Badger Meter. It's a very solid foundation built on specialized expertise and, well, inherent customer inertia. Now, every strength can have a corresponding vulnerability, right? Especially when you're competing with giants. So while BMI has those impressive competitive advantages, where could they be challenged? What are their potential vulnerabilities, the chinks in their armor?
You're absolutely right. No company is without its risks, especially when competing with larger entities. One obvious vulnerability is scale and resources. Competitors like Itron, Xylem, and Landis plus Jure are substantially larger corporations with significantly greater financial resources and R&D budgets. This scale could allow them to out-innovate Badger Meter over the long term by investing in broader R&D programs, outmarket them with larger sales forces, or even compete more aggressively on price for very large contracts, potentially squeezing BMI's margins. That's always a risk. Another significant challenge could come from product bundling. Diversified competitors can offer bundled solutions that include not just water meters, but also gas and electric meters, all managed on a single network platform. Imagine a multi-service utility faced with integrating 3 different systems versus one unified platform from a single vendor.
Easier sell, potentially.
Exactly. This can be a very attractive proposition for utilities that want to simplify their operations and vendor relationships, potentially placing BMI at a competitive disadvantage in bids for these types of multi-utility customers. What's a fascinating tension here is that the broader trend in the utility sector is moving towards integrated smart city and smart infrastructure platforms, where data from water, gas, and electric grids are managed holistically to gain deeper insights. Larger competitors are explicitly positioning their network platforms as multi-commodity IoT solutions to capture this trend. This creates a distinct risk that Badger Meter, with its pure-play focus, could potentially be relegated to being just a component supplier within a competitor's larger, more comprehensive ecosystem, essentially losing control over the higher-value data layer.
So how is BMI responding to this challenge? That seems like a pretty significant potential threat. Our sources indicate that Badger Meter's strategic acquisitions, specifically designed to expand beyond the meter, are absolutely critical moves. They're not just adding companies, they're acquiring capabilities that broaden their scope. Is that the idea?
That's exactly it.
For instance, the acquisition of Cernix for network monitoring, and more recently, SmartCover for wastewater collection systems. These sound like deliberate efforts to build a more comprehensive, water-centric digital ecosystem.
Correct.
This helps them defend against the bundling threat by offering a more complete solution themselves, and crucially, allows them to control more of the crucial data value chain. It sounds like a proactive strategy to maintain relevance and expand their addressable market.
It is. They're not just acquiring companies, they're acquiring critical capabilities that allow them to offer a much more holistic digital solution to utilities. Let's take SmartCover. Entering wastewater is a big move because it's a distinct market with unique challenges, like blockages, overflows, environmental monitoring. Very different problems. SmartCover's satellite tech uniquely positions BMI to address these problems by providing real-time, remote monitoring in areas where traditional cellular might be less reliable, like underground. These acquisitions extend Badger Meter's reach deeper into the broader water and wastewater network, not just the last-mile connection to the customer. This allows the company to capture a larger share of utility operational and capital budgets, solidify their position as an essential technology partner, and defend against those larger competitors who might try to bundle services. It's about building an integrated ecosystem for all things water data, not just the meter reading.
All right, let's turn the page to the financial story now. This is where the rubber meets the road. Our wizard shows a consistent and accelerating track record of profitable growth. That's a strong statement, especially in a capital-intensive industry. So let's break it down into tangible numbers. Looking at revenue growth after a period of sort of modest growth and even a slight dip back in 2019, the company has posted double-digit growth rates since 2021. This culminated in an impressive 24.4% increase in 2023, and then another strong 17.5% increase in 2024, reaching a total revenue of $827 million. This consistent top-line performance isn't accidental. It's a direct result of the successful adoption of their smart water solutions and the strong underlying market demand we've been discussing. They're clearly capturing market share in a growing segment.
And this leads us to what is arguably the most striking element of Badger Meter's financial story: their profitability and margin expansion. Operating margins have steadily expanded from the 12–15% range about a decade ago to a record 19.1% in 2024.
It's quite a jump.
It really is. And this expansion is particularly noteworthy because it occurred during a period of significant global supply chain constraints and input cost inflation. That wasn't easy for anyone. This truly demonstrates the company's strong pricing power, operational efficiency, and the benefits of a favorable product mix. The improvement is directly attributable to a structural shift in their sales mix towards those higher-margin ultrasonic meters and, importantly, the growing Beacon SaaS revenue, combined with operating leverage as the business scales. This structural shift towards higher margin offerings is a key driver for future profitability expansion. It's not just a one-off.
Okay, now let's talk about their balance sheet strength and cash flow. The sources describe it as clean and exceptionally strong, almost a gold standard in some ways. They have consistently operated with a zero long-term debt, which is incredibly rare for a company of this size and age. It speaks volumes about their financial discipline. As of late 2024, they held a substantial $295 million in cash and equivalents against total liabilities of just $210 million. What does that kind of financial position really mean for a company's options strategically?
It means tremendous optionality and resilience. A debt-free balance sheet provides an incredible buffer against economic downturns, and it gives management maximum flexibility to pursue strategic initiatives without external financial pressures breathing down their neck. And they are highly cash generative. Cash from operating activities has grown substantially, reaching a record $155 million in 2024. They have an excellent track record of converting net earnings into free cash flow, reporting conversion rates of 115% in 2022 and 106% in 2023. That underscores the high quality and sustainability of their earnings. It's real cash.
What's also notable is that their shares outstanding have remained remarkably stable at around 29–30 million. This indicates that their growth has been achieved organically and through acquisitions funded with cash, rather than through dilutive equity financing, which is a big plus for existing shareholders as it shows a clear focus on per-share value creation.
Ultimately, for anyone following this sector, these financial indicators signal tremendous financial flexibility, resilience, and very high-quality earnings. It means the company has the capacity to weather economic storms, invest aggressively in future growth, and seize strategic opportunities without being constrained by debt obligations. So, with all that financial strength and a rapidly evolving market, what's driving future growth for Badger Meter? What are the key strategic initiatives paving the future for them? Their strategy is clearly centered on capitalizing on the digital transformation of the water utility industry. Absolutely. The initiatives are well-defined and interconnected. The primary organic growth driver is the continued conversion of the North American installed base of aging mechanical water meters to solid-state ultrasonic meters, connected via cellular AMI networks. This technological transition is the central pillar of their strategy, and they are leaders in both these key areas. This isn't just a trend. It's their core engine of growth for the foreseeable future, given the sheer number of mechanical meters still in the ground, millions of them. A critical strategic initiative, as we discussed, is the transition from a pure hardware manufacturer to a comprehensive solutions provider. The Beacon SaaS platform is at the heart of this effort, transforming raw meter data into actionable intelligence for utilities.
This software enables advanced analytics for crucial tasks like leak detection, demand forecasting, pressure monitoring, and improving customer engagement. For example, by identifying abnormal usage patterns, Beacon can alert utility to a potential leak on a customer's property, saving water and money.
Very practical.
Exactly. To simplify this value proposition, the company recently introduced the Blue Edge platform brand, which serves as an umbrella for its suite of hardware, software, and service solutions. The overarching goal here is to increase the lifetime value of each customer relationship and build a predictable, high-margin stream of recurring software revenue, making them an indispensable partner rather than just a vendor selling a piece of kit. While the United States remains its core market, Badger Meter also has an established presence in Europe and serves other international markets. These regions represent a significant, albeit more fragmented and complex, long-term growth opportunity. As international utilities face similar pressures of water scarcity and aging infrastructure, the demand for smart water solutions is expected to grow globally, providing a long runway for expansion beyond their current primary market. And finally, they employ a disciplined, tuck-in acquisition strategy to augment their organic growth and expand their technological capabilities. This strategy is focused on acquiring technologies that broaden the company's digital water ecosystem, moving them beyond the meter. Recent notable acquisitions include Syrinix in January 2023. They're a provider of intelligent water monitoring solutions that use high-frequency pressure monitoring and leak detection within the water distribution network itself, not just at the customer tap. So deeper in the network.
Okay.
And then SmartCover in January 2025, a provider of satellite-based real-time remote monitoring systems for wastewater collection systems, marking BMI's strategic entry into the wastewater market.
What's the bigger strategic play here with these acquisitions? Are they truly about extending Badger Meter's reach beyond the meter? And how significant is that move? It seems like they're trying to become a one-stop shop for all water intelligence, not just meter readings.
That's precisely the strategic play. They're not just acquiring companies, they're acquiring critical capabilities that allow them to offer a much more holistic digital solution to utilities. These acquisitions extend Badger Meter's reach deeper into the broader water and wastewater network. This allows the company to capture a larger share of utility operational and capital budgets, solidify their position as an essential technology partner, and defend against those larger competitors who might try to bundle services across different utility types. It's fundamentally about building an integrated ecosystem for all things water data.
Now, let's talk about financial stewardship. How does a debt-free, cash-rich company like Badger Meter, with all these growth opportunities, choose to deploy its capital? The management team has a very disciplined, shareholder-friendly framework, it seems.
They do, and their priorities are quite clear, reflecting a balanced approach to growth and shareholder returns. First, investing in organic growth to fuel their core strategy, R&D, capacity, that sort of thing. Second, paying a growing dividend, demonstrating confidence in future earnings. And third, pursuing strategic acquisitions, like Syrinix and SmartCover, to expand their ecosystem. This framework guides how they deploy their substantial financial resources, always with an eye on long-term value creation.
Let's specifically highlight their dividends. Badger Meter has an exceptional track record here. 33 consecutive years of annual dividend increases. That's a rarity in any industry and a powerful testament to the resilience and long-term cash-generating power of its business model. The most recent increase, announced in August 2025, was a substantial 18%, raising the quarterly payout to $0.40 per share.
Yeah, and what truly speaks volumes here is that this consistent and growing dividend is a powerful signal of management's confidence in the company's future earnings and cash flow stability. It really underscores the high-quality, resilient business thesis. Because such a long-term commitment can only be sustained by a business with predictable and durable cash flows, even through various economic cycles, it's a quiet promise to shareholders about the enduring strength of the business.
Beyond dividends, they also prioritize reinvestment in organic growth. This isn't just abstract spending, it means consistent investment in research and development to drive innovation in their core metering and software technology, as well as capital expenditures to expand manufacturing capacity, enhance automation, and improve operational efficiency to meet that growing customer demand. They are ensuring they have the capacity to deliver on their growth ambitions.
And, as we just discussed, acquisitions are a key use of capital. The company's strong cash position and lack of debt provide it with the capacity to continue executing its tuck-in acquisition strategy, to acquire complementary technologies and expand its market reach, as demonstrated by the recent Syrinix and SmartCover deals. They can fund these without diluting shareholders
or taking on significant debt, which is a major advantage.
And finally, share repurchases are an opportunistic component of their capital allocation plan, allowing them to buy back shares when they believe the stock is undervalued. However, our sources say they are a lower priority compared to organic investment, consistent dividend growth, and strategic M&A. It's another tool in their financial toolkit, but not the primary focus.
Okay, no company operates in a vacuum, of course. How has Badger Meter performed most recently? And what challenges have they faced in this ever-changing economic landscape? Let's look at their performance from 2023 up to mid-2025. The company has continued to demonstrate strong operational and financial performance, successfully navigating a pretty complex macroeconomic environment. For full year 2024, they reported a record year, with sales growing 18% to $826.6 million. Profitability reached new highs, with operating profit margins expanding 230 basis points to a record 19.1%.
Perf margin gap.
This resulted in a 35% increase in diluted EPS to $4.23 and record operating cash flow of $155 million. These are truly impressive figures, showing consistent execution. Moving into second quarter 2025, the company reported continued momentum with total sales of $238.1 million. That's a 10% increase over a very strong prior year period, so a tough comparison. Operating earnings grew 8% to $44.9 million, and cash from operations remained robust at $44.6 million. This performance truly highlights the durable demand for their solutions, indicating that even against tough comps, they are finding ways to grow.
What about the broader supply chain and cost environment? That's been a headache for everyone. Badger Meter successfully managed the significant supply chain disruptions and inflationary pressures of recent years, it seems. They did this through a combination of strategic pricing actions, operational excellence initiatives, and a favorable product mix, which allowed them to more than offset cost headwinds and even achieve significant gross margin expansion. That's quite a feat. Our sources note that while many of these pressures have eased, the company did report in its Q2 2025 results that certain tariff-related cost pressures remain a headwind that they are actively working to mitigate with price increases. So they're not entirely out of the woods, but they've shown an ability to adapt.
Yeah, that seems fair. Another potential headwind for the industry is the impact of municipal budgets and interest rates. Higher interest rates could theoretically slow the pace of large-scale infrastructure projects for municipalities as borrowing costs increase. Makes sense. However, the non-discretionary nature of water system maintenance and upgrades, combined with the availability of significant federal infrastructure funding, like the U.S. Bipartisan Infrastructure Law, appears to be mitigating this risk for the time being.
Okay.
We see this evidenced by the company's continued strong order patterns. Essentially, the fundamental need for water infrastructure upgrades often overrides the immediate economic cycles.
And in terms of strategic developments, the SmartCover acquisition in January 2025 is a key recent highlight. This transaction expands Badger Meter's addressable market into the wastewater sector and broadens the scope of its Blue Edge digital water platform. It's worth noting that this acquisition did contribute to a year-over-year increase in selling, engineering, and administration, or SEA, expenses in Q2 2025, including $1.6 million of intangible asset amortization. This shows the immediate financial impact of these strategic moves. They aren't free, but they are clearly designed for long-term strategic benefit. The quality and strategic vision of a company's management team are absolutely critical to long-term value creation. We always say that. So who is leading this charge at Badger Meter, guiding it through this complex transition? We're talking about Chairman, President, and Chief Executive Officer Kenneth C. Bockhorst, who's been in the CEO role since 2018.
Right. And under his leadership, the company has delivered exceptional financial results, including significant acceleration in revenue growth, consistent expansion of operating margins, and record profitability and cash flow. The numbers speak for themselves. What's particularly impressive is that this management team has successfully navigated major macroeconomic challenges, including the COVID-19 pandemic and subsequent supply chain disruptions and inflation, all while advancing the company's strategic transformation. This demonstrates both operational acumen and strategic foresight. Their strategic vision and execution are also notable. Management has articulated a clear and consistent strategic vision focused on technology leadership in ultrasonic metering and cellular AMI. The transition to a solution-based model through software integration via their Beacon platform, and the expansion of its digital water ecosystem through targeted acquisitions going beyond the meter. The successful execution of this strategy is clearly evident in the company's financial performance and its growing portfolio of advanced solutions. They seem to be delivering on their promises.
And regarding capital allocation and shareholder alignment, their approach has been disciplined and consistently shareholder friendly. That 33-year history of consecutive dividend increases demonstrates a long-standing commitment to returning capital to shareholders, a rare feat indeed. And the maintenance of a debt-free balance sheet reflects a conservative financial philosophy that prioritizes flexibility and resilience above all else. Okay, so we've painted a compelling picture of strength and growth. It's quite impressive. But every great story has its challenges, and every investment carries risk. While the fundamentals are strong, what key risks could impact Badger Meter's future performance and ultimately, an investment? What are the potential pitfalls we need to be aware of?
It's vital to look at the downside and maintain a balanced perspective. Absolutely. The first major risk is valuation risk. We touched on this earlier. Badger Meter's strong performance, defensible market position, and favorable secular outlook are very well recognized by the market. No secret there. As a result, its stock typically trades at premium valuation multiples compared to both its historical averages and its peer group. This premium valuation implies very high expectations for future growth and profitability. Any execution missteps, whether it's a product recall, integration issues with an acquisition, or just a failure to meet growth expectations, could lead to a significant contraction of its valuation multiples and a decline in the stock price. The stock is, in effect, priced for continued strong execution, leaving very little room for error. Another significant concern is competitive risk. This remains a primary long-term business risk. Badger Meter competes against larger, better capitalized companies like Itron, Xylem, and Landis, plus JIR. These competitors have substantially greater financial resources and R&D budgets. They could leverage their scale to compete more aggressively on price, particularly for large utility contracts, which could squeeze BMI's margins. Furthermore, their ability to offer bundled solutions across water, gas, and electricity could be a significant competitive advantage with multi-service utilities, potentially forcing BMI into a new component supplier role if they don't continue to successfully expand their own ecosystem.
Right, that threat again.
And of course, a technological breakthrough by a competitor or a new disruptive technology entering the market could also challenge BMI's current leadership position. We also have customer concentration and cyclicality. Badger Meter's heavy reliance on U.S. municipal water utilities as its primary customer base creates concentration risk. While generally stable, public sector spending can be subject to budgetary pressures and political cycles. A severe or prolonged economic downturn that significantly impacts municipal tax revenues could lead to the deferral of large-scale meter replacement projects, slowing the company's growth. Utilities are not immune to budget shortfalls. Even for non-discretionary spending, they might simply delay the upgrades. Finally, there's technology and adoption risk. The water utility industry is historically conservative and can be slow to adopt new technologies. It's just a fact. The pace at which utilities transition from traditional meters to AMI systems is a source of uncertainty and a key variable in the company's growth projections. While the trend is clearly toward AMI, the timing of this multi-decade replacement cycle can be uneven and lumpy from year to year. Additionally, as a technology-focused company, BMI is exposed to the risk of disruption from new or superior technologies that could emerge from competitors, or simply a lack of broad adoption if the perceived benefits don't outweigh the cost for a critical mass of utilities.
So it's a bit of a tightrope walk, balancing immense opportunity with inherent market and competitive pressures. For anyone considering this sector, understanding these risks is just as important as understanding the growth story. It gives you that balanced perspective on the investment opportunity. Given all this, the immense tailwinds, the strong competitive position, the excellent financials, but also the risks and that premium price tag, the big question for investors is, how does the market currently value Badger Meter? Let's look at their valuation multiples and see how the market is pricing this high-quality business.
Right. As of mid-2025, Badger Meter trades at a PE ratio trailing 12 months of 41.2x, an EV to sales ratio TTM of 6.4x, and an EV to EBITDA TTM of approximately 28.0x.
Wow. Those aren't typical industrial multiples.
Not at all. They're bordering on what you typically see for a high-growth SaaS company or maybe a cutting-edge technology company.
Now, when we compare these figures to its peers, the research clearly shows that BMI trades at a substantial premium on all metrics compared to companies like Itron, Xylem, and Miller Water Products. And it's not just compared to peers. Badger Meter also trades at or near the high end of its own historical valuation ranges. A PE ratio above 40x and an EV sales multiple above 6x suggests that a significant degree of future growth is already priced into the stock. This is a premium that demands justification.
Absolutely. This premium valuation, however, is not without fundamental justification. We should be clear on that. There are several key reasons why the market values Badger Meter so highly, setting it apart from its peers. Firstly, superior growth. BMI has consistently demonstrated higher and more consistent organic revenue growth than its peers in recent years. That makes it a more attractive growth story. Secondly, higher profitability. The company's operating margins are structurally higher, reflecting its strong pricing power, operational efficiency, and that favorable product mix, especially with the shift to ultrasonic meters and the growing SaaS revenue. This isn't just a temporary bump, it looks like a structural advantage. Thirdly, financial strength. Its debt-free balance sheet stands in stark contrast to many peers that carry significant debt. This financial prudence dramatically reduces financial risk and typically warrants a higher multiple from investors who value stability and optionality. And finally, the pure play advantage. As arguably the only truly pure-play water technology company among this group of publicly traded competitors, it offers investors direct, undiluted exposure to the attractive secular trends in the water industry, without the complexity or potential drag from other, potentially slower-growing or more cyclical markets like electricity or gas. These factors combined allow the market to essentially re-rate BMI as something more than just an industrial company.
Okay, so given this premium, there are naturally two valid ways to interpret it. A bullish perspective would argue that this premium is well-deserved. Full stop. BMI possesses a defensible competitive moat built on its technology leadership and those high switching costs we discussed. It operates in a market with a multi-decade runway for growth driven by non-discretionary infrastructure spending, and that ongoing shift to a SaaS-based recurring revenue model provides a clear path to further margin expansion and higher quality earnings. From this viewpoint, Badger Meter is a best-in-class operator in an excellent industry, and as the saying goes, quality is not cheap, value is intrinsic, right?
Right. That's the bull case. On the other hand, a more bearish or cautious perspective would argue that the current valuation leaves very little margin for safety. The stock is essentially priced for perfection, assuming a seamless continuation of high growth and margin expansion year after year after year. Any slowdown in the AMI adoption cycle, increased competitive pressure that erodes margins, or even just a brighter market downturn that leads to multiple compression could result in significant downside for the stock. This view suggests that the current price reflects a broad consensus that the company will continue to execute flawlessly, and any deviation from that could be costly even if the underlying business remains strong.
So what's the overall verdict on valuation from this deep dive? Where do we land?
Based on this multifaceted analysis, Badger Meter appears to be fully to richly valued. That seems to be the conclusion. The market is efficiently and appropriately rewarding the company for its high-quality business characteristics, its superior financial performance, and its strong long-term growth prospects. The premium valuation relative to its peers seems fundamentally justified by its unique position and strong execution. We've laid out why. However, because these positive attributes are already reflected in the stock price, the potential for future returns, driven by further expansion of its valuation multiples, appears limited. Instead, future shareholder returns are more likely to be closely aligned with the company's underlying rate of earnings growth going forward. It's a great company, but the market certainly knows it.
We've covered a lot of ground today, from Badger Meter's century-long journey and its cutting-edge smart water solutions, to the powerful global trends driving its growth, its incredible financial resilience, and the delicate balance of its premium valuation. It's been a truly insightful deep dive into a company at the heart of an essential yet often overlooked industry.
Indeed. The strategic pivot to recurring software revenue, those beyond the meter acquisitions into wastewater management, and the enduring, non-discretionary need to modernize our aging water infrastructure are all fascinating interconnected elements of this story. Badger Meter is truly at the forefront of a necessary global transformation, one that's only set to accelerate.
And here's a final provocative thought for you, the listener, to consider. As we all become more aware of the true value and increasing scarcity of resources like water, how will companies like Badger Meter continue to innovate not just in measurement, but in resource management, conservation, and perhaps even entirely new ways of interacting with our water supply? The challenge of water scarcity isn't going away, and the technology to manage it is only getting smarter. And what other essential, often overlooked sectors are undergoing similar digital transformations, creating both immense opportunities and complex challenges that demand our attention. Take a moment to think about your own community's water system. What role do you imagine smart technology plays or could play in its future? The answers might surprise you, and they certainly point to a world where our infrastructure is becoming increasingly intelligent. Thank you for joining us on this deep dive. We'll see you next time.